Oando PLC is an integrated energy company that operates in the west of Africa. We're integrated on the full value chain from the downstream marketing business, which we recently announced the divestment of up to 60% to a consortium that involves Vitol and some private equity companies. And we have a supply and trading business with that part, and we then have the midstream, which is Oando Gas and Power, where we've built a very strong network of gas distribution lines in the east, central, and west part of Nigeria, the biggest by far in Africa of such distribution networks, with over 132 kilometers of gas distribution network in Lagos. And then we have our upstream business, which has Oando Energy Services, that has rigs, rigs business. We have 4 swamp rigs that are available to drill for whoever it is that wants to do swamp drilling. Some services, some oil field services that support that, drilling fluids, drilling bits. And then of course we have what I call our flagship, which is Oando Energy Services, which is the #1 indigenous EMP company in Africa right now, with over 55,000 barrels of oil equivalent of oil a day from 16 assets. And this time last year we were just concluding the ConocoPhillips acquisition that added about 50,000 barrels of oil to us, and that is what has taken us from a 5,000 barrel a day company to 55,000 barrels a day. We're largely not operating right now. Our partners are Agile, operating the NAOC JV, and Niger operating 156 with Network EMP, who are the named operators in 113. But we take a very strong position as the technical advisors in a lot of these assets, financing partners sometimes, and a strong non-operating partner. And that's a footprint. I have a lot of assets that are in development and exploration assets as well. But as you can imagine, in this time, our priority is really producing assets, which give us a strong cash flow and the flexibility that we need. About 65% of our production is gas, which brings certain advantages of stability of price. As oil prices that go in were linked to LNG prices a little more stable, and give us a very strong base for us to support our business. Well, we are not affected by the tightness in the market right now because our cash flow from operations funds all our obligations. We have obligations, for OPEX, CAPEX, and debt finance, which are strongly met by cash flows right now. However, last year we needed to raise $900 million of debt on this market, of which we're able to raise about 350 of that locally. We think that has tightened a little bit since then, as oil prices have come off the cliff. Come off the top, fallen off a cliff, but not a very deep cliff. And things have tightened in Nigeria a little bit. There is always going to be capital available for very good deals. The banks are, of course, a lot more cautious than they've been in the past. International banks and local banks, but they're still doing deals. We're looking at some deals that we hope to be able to announce, some financing, refinancing that we hope to be able to speak about in the near future. So we're still seeing interest in that. The first that always jumps to my mind is the fact that geological risk is very low. This is an oil domain that is very well understood. Niger Delta geology is very simple. People understand it. It's prolific. People understand it. It's almost impossible, very difficult for you to drill a dry well. If you don't hit oil, you definitely hit gas, and that is a major struggle. It's also very mature oil province. It's very well developed. You're practically never more than 50 kilometers away from an oil infrastructure. And that brings certain advantages in development. Then operating cost on a unit basis is also very low compared to what we see in a lot of declining provinces. I also like to point out that we've seen that in our joint venture that the assets, although they're aged, they're not mature. The opportunity for us to grow production through rigorous activity, through intervention is still very high. And I'm not talking about, extended, oil recovery, EOR, or, any of such enhanced oil recovery, or anything of such nature. This is really just applying basic technology, sand control, horizontal drilling, water shut-off, gas lift, ESPs, and all those things to enhance production. There's a very strong potential in the assets, and we've seen that not just in our own assets where we've doubled production over the last 12 months, with our partners in the ENI, now JV, but also we've seen other companies do that in this space. The challenges, of course, one would have to speak about, the funding issues in the joint ventures, with NNPC carrying 55% or sometimes 60% of the capital that is required to optimize its assets. As the government is focusing a lot on social spending, the competition for those dollars is at an all-time high. And the government is stepping forward and thinking through new solutions that are going to free them from these obligations while retaining the royalty and tax revenues, which are also very strong. So that is the current issue that we're dealing with. The other issue that we're dealing with as well as the security is oil theft. We've seen those come off the highs of last year. So significant progress made by the security forces to bring those numbers down. So all in all, I think, a few concerns, but very strongly positive. And I think one very important positive that I left out, for companies like ourselves, is the fact that we're seeing the IOCs, divest of land and swamp assets and move deep water or move into other provinces, and this gives us opportunity to access fields that have significant upsides at very good prices. And there are not many places around the world where this is currently happening. So for external investors, I say, looking into Nigeria, the growth potential is still very, very strong, even at this kind of prices that we have today. And that should definitely be something that warms people's juices on for sure. You come to Nigeria, come invest with us. The opportunities are still, abound, for great growth, and we haven't even started looking at how to take advantage of the gas resources and gas reserves we have. So oil is still, strong growth potential. Gas is that hasn't even really started. Of course, we produce some gas into the domestic network, but it's not even close to anything that we can do. So there is significant growth there, definitely. Gas to everything. Gas to power for sure. Gas to industries, petrochemicals. The amount of gas that we have. So we currently talk about 170 or 180 TCF of gas that has been found and developed in the quest to develop oil. The conventional logic is there's significantly more gas to be found if we were to look out for it. And the infrastructure is now beginning to mature. We're now beginning to hear of large gas networks that are being built to evacuate the gas. The pricing is now firming up that is going to encourage development for gas. So now the future looks really bright for the gas development into the country. And the power plants are now beginning also to sprout up. We're seeing electrically power sector reforms that are firming up. We're seeing the transmission network that is firming up. And the ability to offtake power and distribute it and sell it is getting better and better than we do. So the investment proposition that this represents is getting very strong.